A very good morning, good afternoon, and good evening to all. Myself, Vaibhav. I welcome all of you to today's session of Market Movers. Today is going to be another day of record closing for US equities. Here, the word another has to be paid attention to simply because in recent past we have had so many days of new closing highs that we have lost count. Nonetheless, it still calls for a round of applause, if not for uncorked champagne bottles. Today, the impetus has been provided by the mere absence of any further uptick in the inflation data for the US economy. On the forex side, we are seeing that the US CPI release has altered the trajectory of the US dollar, at least for the session, if not for long. The CPI in itself didn't change much compared to the prior month's print. It is at 5.4% in terms of year on year. And for July, it is unchanged from June. A lot of it can be attributed to the low base effect. The select pockets of the economy like food and transport are still running hot, while housing seems to be stabilizing in months on month terms. The inflation has moderated to 0.5% for the month of July compared to the 0.9% earlier, and this seems to be the influencing factor for market participants' outlook. And after all, Fed won't be forced to for early normalization of ultra loose monetary policy if inflation starts to show the signs of easing. On the commodity side, the USWTI crude oil inventories were reported by the EIA, and it saw a decline of 0.447 million barrels for the week ended 6th of August, which is a less than anticipated decline of more than 1 million barrels. Still, the crude oil prices are inching higher as last week inventory additions proved transient and earlier trend of declining inventories seems to be resuming. Now let's shift our stance on the technical side from the fundamental side, in which we will cover the USDJPY, and after that we will also take a look on the USDCAD. I think I forgot to change these names here. The It is from prior session, so forgive me for this error of omission. Now let's see what's happening in the USDJPY. This is the daily time frame chart, and after getting close to the highs, prior swing highs, the USD seems to be taking a breather, and we can't really say if it's going to be a turnaround of sort for the USD For the time being, it is more looking like a correction rather than any trend reversal. And for any trend reversal to happen, first we will, of course, need a couple of days of consolidation where the USD struggles to cross above these prior swing highs, so that will be a more reliable indication of any possible trend change. For the time being, we will be treating it as a correction, and we will be still looking for the buy trade as and when it comes our way. But for the intraday session, I think it is not really a prudent idea to go for a buy. Rather than, there are some key levels which we can keep an eye on, and these levels should hold at least for next couple of days, and only after that we can think about getting involved for a new trade. So if we have to rely on the lower time frame charting of the 4 hours, here as you can observe, the trajectory is still bullish. We have the central pivot point now likely to act as the support just little above 110, and that's almost 40 to 50 pips away from the current price area, and we can't really rule out this correction to deepen towards this prior consolidation low. And also, considering this central pivot point is there, we can rely on this price zone, and we can utilize this as our desired area of entry if we still believe in the USDJPY's potential to run higher. And maybe after this correction, it can resume its rally, but for that, it will have to respect this near term support, and only after that, we can think about the new trade. For intraday, the USDJPY is inching lower, and as I said, the impetus has been the inflation data, which is not much, which is not showing signs of much uptake, and that has resulted in USDJPY losing some luster. But this also can be attributed to the fact that in last couple of sessions we have seen sharp moves in the USDJPY. Rise of more than 200 pips had already taken place. So it can also be construed as a near-term correction. And as I said, we still have the formation of higher highs and higher lows in place. So that gives us some reasons to believe in the continuity of the trend in USDJPY. If we consider the formation on the SMA, we have this decline below the 50 SMA. That means in near term, the USD has lost its momentum, and this will not be the price where you should be getting involved for any new long trade. Rather than that, we will have to rely on the prior consolidation low, and on the lower side we do have this 200 SMA, which is there around 109.8, and I think this is going to be the key levels which we can utilize as a stop loss. So suppose if we have further correction in USD and USD goes on to decline towards these 110 level, after due consolidation we can indeed think about getting involved for a new trade while keeping the stop loss just little below these 200 SMA, and I feel that will be more opportune time to get involved and go for a long trade here while anticipating a move toward this prior swing high or even beyond that. So that is going to get us excellent risk reward ratio of more than 1 is to 2, and if you are willing to wait you can even go for a ratio better than even 1 is to 3, as we have the possibility of a new swing high being formed closer to 111, and if your entry is anywhere close to 110, then keeping the stop loss closer to 109.70 is going to get you the risk reward ratio of 1 is to 3 at the minimum. Sorry. Now let's see what's happening in the USD CAD. We are considering the CAD after a long time, and this time around the USD CAD seems to be stabilizing closer to this 38.2% Fibonacci retracement of its prior sharp rally starting from June around the levels of 1.20 and extending all the way towards 1.28. Now for last couple of days it has spent most most of the time in this narrow range, consolidating in between 1.25 and 1.26 on the higher side. After this decline in yesterday's session, even in today's session, it is trading on the softer side, and CAD is gaining ground. I think for next couple of days, the trajectory is likely to change, and we can expect the USD CAD to even go on to decline below these immediate swing low, which is there around 101.24. So we will be looking for shorting opportunities in USD CAD, and here you can take advantage of the softening of the USD while CAD is gaining ground. We have the central pivot point, which is likely to act as a key marker for us whenever we are going to trade, and only when the USD CAD's price action is unfolding below the central pivot point, we should be going in for a new trade. We should be looking for short selling the USD CAD while targeting the moves toward this immediate swing low, which is just little below 1.245. So we have the possibility of a half a percentage point move from on the lower side from the current valuations, and stop loss is also not going to be much wide. I think the stop loss just little above the immediate swing high around 1.255 should be good enough. If we consider the regression curve, it has also started to incline on the lower side as the price action has gone sideways with the formation of lower high and lower low. So both these technical parameters are pointing to the possibility of weakening of the USD against CAD, and we should stand ready to capitalize on that. For optimizing the entry point, we can take help of these three SMAs. These three SMAs are converging closer to 1.253, and as the price action is now below this 200 SMA, I am expecting these two SMAs, the 50 and 100 SMAs, to go on to decline and meet these 200 SMA closer to this 1.253 level. And this is the price area which I am talking about if you want to optimize the entry. Any entry in the vicinity of 1.252 to 1.253 is going to keep our stop loss fairly sharp. I think a stop loss just little above the immediate swing high around 1.255 should be good enough. And on the lower side, as I said, we can expect the move towards 1.247 or even beyond that. So looking at that possibility, we can get ready for this trade. But for that, we will need some upward momentum in the USD CAD to push the USD CAD towards our desired entry points. And after that, I think we will be in better position to capitalize on a further move on the lower side. So that's my take looking at the current price formation of the USD CAD. If any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. You can check out the Ducoscopy Analytics page for further coverage of the market developments whenever you want to start trading. The JForex platform is at your service. If any sort of assistance is required, you can write to me in the feedback section. We are also available on the Facebook. You can follow our page there. Thank you all. Have a profitable day ahead. See you next time. Till then, goodbye.